We can't keep waiting for the rest. Team members, sorry, team leads, are you here? Team leads, if you are here, please let me know.
The team lead for group 11 is here.
Okay, group 11. All right, confirmed. All right, who else is here?
Hello.
Hi, good afternoon. Please, who am I speaking with?
My name is Joy Ogingo from Group 6. I'm not sure even if I'm the team lead because nobody showed up to participate.
Oh,
So I'm the
okay.
only person for my group.
Oh, okay. Hi. Okay, you're the one that sent me a message on WhatsApp, right?
Yeah, that's me. Yeah, that was me.
Oh, okay. All right, there's no problem. All right. Thank you. Who else, please? Who else?
Hi, Ella. Good afternoon.
Hi, good afternoon. Who is speaking, please?
Okay, so I'm speaking for group 3. I wouldn't say group lead, sha. Well, I think it's just two of us that were able to carry out the projects. Good afternoon. So
Okay.
I think the other person that worked with me is trying to join the meeting. So
Okay. All right, thank you. Who else, please? Next person.
hi, Ella. Good afternoon.
Hi, good afternoon.
This is okay.
Oh, it's okay. Hi. Good afternoon. How are you?
Fine. So I'll be speaking for group 5 and all the team members
Okay.
except one person is here to join. So we have all the team members here, just one person is here to join.
Okay. All right, that's fine. All right. Group 4. Mr. Adetola, are you here? Group 4. Team lead for group 4, are you here? Okay, group 14. Balogun Yetunde, are you here? Group 7, Helen Agbayewa, are you here?
Yes. Good afternoon.
Okay, good afternoon. Group 13, Mr. Adekunle, you're here? Okay. Group 12, Mr.
Good
Paul.
afternoon, Emanuela.
Hello, good afternoon.
This is Oluwadamilola for Group 9.
Okay.
The person I asked, the person I asked to present just called now that she's in church, and I'm
Okay.
calling on with my system. But I was speaking on behalf of Group 9, if I'm chance today.
Okay, group 9, okay. All right. It's okay, group 5, right? Ayomide Alabi, group 3. Are you here? Group 3 team lead, are you here? Okay. All right. So today I'm expecting just 11 team, all right, to present because the remaining 6 did not submit. I do not know why. All right, so I'll be starting with, okay, let me just start from the top. Team 1.
Good afternoon, ma'am.
Hello, good afternoon, Mr. Akonji. Good afternoon. So are you ready for us?
Yes, by God's grace.
Okay. All right, no tension, all right. It's just to test how far we've gone, okay? So I'm going to mute myself and hand the mic over to you. So like the stage is yours. So you're going to share your screen so that we see what you guys have done. All right, so that's how it's going to be. Every team, you take notes. You're going to share your screen once you're called upon. Share your screen and then you take us through. All right?
All right.
Okay, all right. Mr. Akonji, you can share your screen with us. Okay. All right.
Yeah, can you see my screen now?
Yes, I can. Yes, yes. All right, please go ahead.
All right, ma'am. So for group one, so this is what we worked on. Sorry. So these are the team members, their names, and everyone was actually active. Actually, though, we had Nigerian factor with light and other stuff, but everyone was active throughout the process. So the summary of the overall performance for Pine Household and Office Supplies Limited. So they recorded a revenue performance of 114,867,566, which shows a 4.4% increase in revenue growth compared to the last year revenue that was given in the project document. Also in quarter four, so they sold more units, 19,455 units. So compared to the previous year quarter four sales. And also that shows an approximate of 52% increase in the items sold in quarter four. So that's just the general summary of the overall performance. So the key financial KPIs. So we had, after the calculations and carrying out analysis, so the financial KPIs include average cost per unit in the year, which was 1,079 naira. So average sales per unit, which is 1,351 naira. So total units sold in the year was 85,710 units. So total revenue, so 114 million plus. Total profits in the year, 22,801,855 naira. So total cost for the year, so shows 92,065,711 naira. So those are the financial KPIs. So how the non-financial KPIs includes average units sold in the year. So 50. So top 5 months with the most revenue shows March, April, May, November, and December. So top 5 months with the highest purchase cost shows January, February, March, April, and May. So top 5 months with the most profit were July, August, October, November, December, which falls in the third and fourth quarter of the year. So top 5 months with the most month over month rate. So for units sold, so that was January. So and for profit, so it was October. Okay, so the monthly trends. So for the monthly revenue trend, the line graph shows a steady increase from January to March in quarter one, where revenue peaked in March. So with a continuous drop in revenue, which hit its lowest in August, and also began to rise till December, which had the highest record of revenue accrued in quarter four. So that was the revenue trend for the business year. So the monthly profit revenue trend rather. So it shows a steady rise of profit from January to July. So where January had the lowest profits accrued and July had the highest record of profit accrued in the first half of the year. So November recorded the highest profit made in the second half of the year. So the monthly cost trend that shows a steady rise throughout the year. So it says that January had the lowest cost trend. January had the lowest cost unit or value rather. So while December had the highest cost value. So in the business year, so it was a steady increase. So for the trend. So while the monthly unit sold trend, so January recorded the highest number of units sold, which continued to decrease throughout the quarters of the year, and December had the lowest recorded number of units sold. So that was all about the trend analysis, the monthly trend analysis. So the restock sales analysis. So the number of items with balance brought forward, with zero balance brought forward, so it was 40. So the number of items with less than 50 balance but not zero was 60. So percentage of items that requires restock was 74.42%, while number of items greater than 50 was 42. So that was for the restock analysis alert. So insight and recommendation. So after all the processes that was done on the data set, so we came to conclusion that the is the business profitable overall. So we came to conclusion that yes, so the business was profitable overall, considering the total profitability of the year recorded at 23%. And from the given informations about the industry, so we're able to know that the profitability rate is between 10 to 25%. So, and 23% falls within that range. So, with that, we ascertain that the business was profitable. So, also from the profitability value above, the company performed excellently, showing a very close margin to the maximum profitability that can be made in the industry, which is 25%. So the company recorded an excellent revenue of 114 million compared to the previous year, which was 110, while keeping total cost at a minimal increase of 92 million compared to that of the previous year, which was 91 million. So the revenue figure shows a 4.4% increase compared to that of last year, and the total cost shows an approximate of 1.2% increase compared to that of last year. So with that, we can assume that the cost compared to last year's business so was still minimal and manageable. So for the company, so the cost rate incurred during the business year is minimal compared to the rates to the increase rate signifies a good business year. So simply what that is saying is that comparing the cost rate and the revenue rate, so we can
So sorry. I think you are out, Mr. Akonji. I can't hear you anymore. Okay. Okay. All right. I think Mr. Akonji's network went out. So let's give him about a minute to get back.
Hello, I'm back. Sorry.
Okay. All right. Please continue.
Sorry, I had issues with my network. Sorry.
All right. It's fine.
So, can everyone see my screen?
Yes. Yes, I
Hello.
can see your screen.
All right, Mama. So that was all about the insights generated, and that was that. So sales strategies to improve revenue and profit in the coming year. So adjusting pricing model to suit the industry's dynamic. So that means what that is trying to say is that the company should adjust their pricing model such that it will fall within the range of the industries. So improving customers' experience on e-platforms by making it more user-friendly and easy to navigate. Utilizing social media pages not currently in use to boost wider outreach and marketing presence. Ensuring customer retention by building loyalty and long-term values. So through different loyalty programs like giving discounts and offerings. So also improving on strategic collaboration by partnering with complementary businesses to leverage each other's strength. And also providing a recurrent training for employees to enhance their proficiency and fostering innovation to drive growth and ensure long-term processes. So those are the ways that, or those are the uh, strategies that can be improved to as against the coming business year. So stock management recommendation, improve and increase the restocking of products that generate more revenue and profit for the company, like having more of printer and sticky notes and every other product that drives profit readily in stock. So also reducing the stocking of bottom product items that are occupying spaces on the aisle without driving sales. So suggestion on whether to drop or retain specific items. So just as explained earlier, so stock management recommendation, retain items that drive sales and boost profit and drop items that makes little to no sales at all. So identifying growth opportunities for the business, expanding on traditional market, utilize.
Mr. Koji,
So as it were, yes, ma'am.
Mr. Koji, I am so sorry to call you. I'm so sorry to call you. So you have about 5 minutes there about left.
All right. So expanding on
All right.
traditional marketing utilized like retailers and wholesalers. So from the in companies information, so we had it that they distribute supplies to retailers and wholesalers so they help them sell. So they can also expand on that market so that they can have more uh, distributors that would market their product for them. So offering new products or services like interior designs for individual and corporate offices, whom are the major target audience of the business. So enhancing customer experience by delivering high quality products, providing support and ensuring stress-free purchasing process. Ensure to continue to improve the business model to accommodate increasing demands. Also invest in marketing and branding strategies to increase visibility and attract new customers. Thank you. That's all.
All right, all right. Thank you so much, Mr. Kanji. That was a wonderful presentation. So I'm just going to ask you a few questions, all right? So that we can
Yes,
move
ma'am.
on to the next. All right. So first things first, I don't think I saw this PowerPoint slide in your submission. I don't think.
Yeah, we didn't submit it actually.
Okay,
So it was a
okay.
last minute job.
Is there any reason why?
Not really. We had to add some things later in the end, so that was why we couldn't submit it.
Okay, okay. All right. So please can you open your Excel
All right.
workbook for me? Okay. All right. All right. So I'm guessing this is your go to your restock analysis, please.
Restock, okay.
Yeah.
I have it here.
Okay. Okay. All right. So this is good. All right. Number of items with perfect. Amazing. Correct. Correct. That was good. That was okay. Perfect. This is good. Good, good, good. Go to your sales tracker, please.
All right.
Okay. So select December for me, please. Perfect. Okay. Amazing. 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 Okay. Okay. All right. This is good. Let me see your sales analysis.
Sales analysis. Sales analysis, which is what?
That is your SP calculation. Yes. Perfect. Okay.
Okay, I have it here.
Okay. All the way from the beginning, please, from the top.
Okay, man.
Yeah. Okay. Okay. So this is actually really, really good. Yeah. This is good. But now the problem is, first of all, you didn't round your figures from January to December. You didn't round them to 0 decimal place. That is number one. And then number two, I can see your 1000 separator. For example, the first item, June, 1607.97. There's meant to be a comma after the one so that it's easier for people to know. Because most times when they look at this,
Okay.
it'd be difficult for them to process what might have happened. But then when there's a 1000 separator, they can say, oh, okay, this is above 1000 or this is below 1000. All right. Okay. So how were you able to get to your total revenue? Can you hear me?
Hello.
Yes, I said, how were you able to get your total revenue?
Total revenue.
Yes.
Sorry, let me try to share the screen again. Okay. So the total revenue, that was the units sold multiplied by the average sales price. The total units sold multiplied by the average sales price.
Average sales price. Okay. Okay. All right. All right. That will be all, Mr. Country. Thank you so much. Thank you.
Yeah.
All right. So, group two, are you ready? Team two, are you ready? Okay. So I guess team two is not here. Let me see who's next. Group 12, are you ready? Please, guys, there's no time. We have 11 teams. Okay, 10 left. So please, group 12, are you ready? All right. Group 5, are you ready?
Yes. Good
All
afternoon,
right.
Ella.
Hello, good afternoon. So please, you have 18 minutes to present your project. All right. Then I ask you a few questions and that'll be it. So please, quick, straight to the point. All right. Thank you so much.
All right, thank you.
Yeah.
Yeah, can everyone see my screen?
No.
Please, can everyone see my screen?
No, we can't see your screen.
Let me share again.
Okay.
I think I'm good. Okay. Just skip. Okay, let me share again. How about now?
No, we can't see your screen. Can you share your entire screen?
Yeah, okay, that's what I did. Let me do it again.
Share your entire screen, then click on entire screen, then click on OK.
Screen. Still the same thing. Is it up now?
No. All right, just hang on. Let me show you what you can do.
Okay.
All right. All right. Can you see my screen?
Yes, it's coming up.
Okay, so now let me show you. Oh, okay. I wish I could. Okay, so I can't show you this. All right, let me just show you what you can do. I've stopped sharing now. Click on share.
Yes.
You see the top right here. Go to share.
Yes.
Then you see Chrome tab, window, entire screen.
Okay, entire screen is not showing on my. Hold on.
And screen is not showing on yours. Okay, can
It's
you
not
click on
showing.
window? Can you click on window?
Okay.
Okay, so for your window, click on your projects. I'm sure you must have opened your project file,
Yes.
right? Yes, so
Yes.
click on your project and click on share.
I'm sharing now. Can you see it?
Hang on. No, we still cannot. Okay, yes, I can see it now. Yes.
Okay, thank you.
All right, you're
All
welcome.
right. Okay, good afternoon once more. I'll be speaking for Group 5 on the Excel Capstone project. Okay, so this is Pine Household and Office Supply Management Report, which we just worked on. And Group 5, we have 5 team members. Myself is Okenre Bua, Alima Idris, we have Favor, we have Anifa, and Fatah Badmos. So let me move to the next slide. So before I move to the next slide, Pine Household and Office Supply is a distribution company that specializes in distribution of 142 unique items, and it was established in 2021. So they have different means of redistribution, both retail and to other corporate organizations. So this is an executive summary. Like you can see here, the reports represent the sales and financial performance of Pine Household and Office for the year under review. And the company has achieved a revenue of 114.9 million with a total profit of 22.8 and sold 85,710 units across the 142 unique items, as earlier mentioned. Performance also peaked in the month of March, May, November, and December. And this is due to the seasonal demand and corporate restocking. While their overall profitability was strong, there was also gaps in inventory management, which led to missed opportunity, especially in fast-selling categories. Strategic recommendations are also provided to sustain growth, optimize cost, and strengthen stock management. So this slide speaks to the key financial KPIs. On the average cost price for Pine Household and Office Supplies, 1,079 units was sold on an average for the year under review, while the average sales price was 1,351. The average unit sold monthly per items was 50, while the total units sold as a business was 85,710 units. They made a total revenue of 414.8 million naira, and the total cost for the business was 92 million, and the total profit was 22.8. So yeah, I'm going to view the Excel workbook, but before I go to the Excel workbook, I'll just move on to the other slide and come back to that. So based on our analysis, the best and worst performing items during the period for the period under review, we had table fan, wireless charger, NAS storage, juicer, and air fryer as the top selling by unit, while the top profit contributors were smart light bulb, electric skillet, clock, sticky notes, and document holder. However, there are also worst performing items, which are the shaver. We had smart thermostat, cordless phone, water purifier, smartwatch charger. For the stock analysis, all 142 items ended the year with greater than 50 units. We had no zero stock items at closing. Some stock out in peak demand, and we also had lost revenue opportunity. The key issue here was due to a lack of dedicated inventory oversight. So for the strategic insight, the overall profitability of the business was very strong. Yes, it was profitable. As compared to last year performance, the company had 20% margin in their profitability this year. So that made it very, very profitable and strong. While for the revenue and profit stability, above industry average. In terms of weakness, the supply chain efficiency as well as stock management gap, as earlier mentioned, were part of the insights from the work. So our recommendation that one, a dedicated inventory manager should be appointed. The company should expand their digital marketing, festive and back to school period, and also prioritize restocking fast moving goods, especially for the season. Reassess and phase out underperforming items. Then also explore eco-friendly and smart product lines. So that speaks to this slide. So if you don't mind, I can move to the Excel workbook. I don't know if any person. Go. Okay, thank you. So for the Excel workbook, I'll be taking us through what we did to get the.
Wait. It's okay. Can you hear me?
Yeah, I can hear you.
Have you opened your Excel workbook?
Yeah, I'm sharing this. Can you see it?
Okay, no, we can't. So you have to change the window.
Okay, yes, that's true. Window. Okay, thank you.
Yeah.
This is it. Can everyone see it?
Yes.
All right, thank you. So this speaks to the Excel workbook is where we had our analysis, which we presented in the slide I spoke to earlier. So for us to get average and the financial KPI and non-financial KPI, first we had to create our sales tracker, which is in this slide. Sorry, excuse me. So we had to create our sales tracker by making use of the index and data validation on this slide. I'm presenting currently.
Okay, so can you select December for me?
Okay.
From the month toggle, can you select December for me?
I did. I don't know if you saw it. Let me do it again. December. Okay. Yeah, did you see it?
Okay. So from what I can see, January is still showing, but then move over. Wait, this is not your sales. Okay. Okay, so December is showing now. Okay. So first things first, your sheet is named index and data validation. Why?
Okay. So I the reason I named this the index and data validation was for me to be able
Yeah, I can hear you. What do you say?
to probably I named it wrongly. I worked on this particular sheet to be able to generate my sales tracker. So this was not the sheet I used for my entire work.
Okay. So why is it your main sales tracker?
Can you see it?
No,
Is it up now?
not yet. We're still on index and data validation sheet.
Maybe I should stop sharing and share again. I think my
Okay.
network is now. Is it up now?
Not yet. Okay. Okay, it is up now. Okay. So for your sales tracker, there is not, like, I'm not saying a month toggle. Why?
So I did the month toggle under the previous sheets and brought them manually to this particular sheet. So I used the filter icon to toggle around the month.
Okay,
So
so
when I use
scroll,
the filter, okay.
okay, scroll down. Let me see.
Then
Okay. Scroll down, like scroll down on your sales tracker. Let me see.
yeah, I'm doing that.
Okay. Okay, so are you saying that your sales tracker, yeah, it's more or less like, okay, what happened in January, then the next was February. Okay. 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 All right. I can see that. Okay. Okay. So you're saying that you did it in a way that if we filter for just January, we can see that of just January, right?
Yes, for the 142 items.
Okay. Okay. Let me see your restock analysis, please.
Okay, so I have that under the KPI summary. Let me go
Okay.
down. Yes.
Okay. Summary. Okay.
Can you see it?
Yeah. Okay. Attempt to 0, 0. Okay. 0. Okay. Okay. It's okay. You use 365, right?
Yes.
Okay. You use 365. Okay. 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 All right. All right. So you were not able to use a checkbox for it.
No.
Okay. All right, that's fine. Thank you so much. It's okay. Thank you.
So any other question for me?
No, no, no. Thank you. Thank you. That'll be all for now.
All right, thank you.
All right. So moving on to the next group 5 done. 12 not available. Group 1 done. All right. Group 9, are you ready for me? Group 9, are you ready for me?
Like I said the other time, I'm not with my laptop present. The person I asked to present, she's currently on her way back from church, so I'm trying to reach out to her. So I'll still be around.
Okay. So reach out to her. Let's know if she can get in on time. All right. So you guys are on hold. Group 9. Group 3, are you ready? Group 3, are you ready? Please, if you're here, all right, let's be quick. Let's be quick. Time is good. Group 3.
Hi, Miss Ella. Good evening.
Hi. Hello. Success. Good evening. All right. So are you ready for me?
We're trying to connect. No, we're not ready yet. We're trying to connect with our laptop so we'll be able to share our screen. We'll be ready in, let's say, in 10 minutes.
In 10. Okay. Okay, let's see if we have that much time. All right. Okay, so that's for group 3. Group 14, are you ready for me? Group 3, New World. Who submitted your projects? Who submitted your team's project on the classroom?
Ayomide submitted it.
Ayomide, okay. Let me see if I can find it. Okay.
Good afternoon. Sorry, as group 7 be called, my network cuts me off. Hello, can anybody hear me? Or is it my network?
Can hear you.
Hello.
Hello, Helen. Hi, good evening. Can you hear me?
Yes, I can hear you. I don't know if group 7 has been
called. Can you hear me?
Yes, I can hear you now.
Group 7. Let me see if you guys submitted. Okay, group 7. Okay, yes. So are you ready?
Okay, yes.
Okay, all right. The stage is yours. So Helen, you have 18 minutes to present. All right.
Yes, I'm looking for the tab for the option for presentation.
Okay, so at the top right, you see the icon share.
Okay.
Yeah, so click on share, and then when you go to share, you see Chrome tab window entire screen. So go to entire screen and click on it. When you click on the entire screen, okay, yes. Let me see. Okay, I can see that. Yeah.
Okay. So we're actually 7 that sorry, we're 5, but 3 of us were active. So there were times that we don't really have time to come together to do the work at once. So this is what we're able to come up with. I, myself, and Mr. Eric and Layo. I don't think she's on the call. So the summary of the overall performance of the year. Actually, we're not able to come up with the whole summary in PowerPoint presentation because I was busy yesterday and it was assigned to Layo. She was to do the summary and all, but I don't know, she was not around yesterday. So this is what we're able to come up with, the summary of the overall performance of the year. The total cost for the year was 92,000 plus. Then the revenue is 114,867,000. And the profits for the whole year is 22,800,000. And the amount of the units sold for the whole year is 85,710. So this is okay. So for the financial KPI, the average cost per unit year. The average cost per unit year is 12,953. Then the average sales price for the year is 16,216. Then the average unit sold is 604. The total units sold in the year is 85,710. The total revenue for the year, which, okay, the summary, I said that earlier on, 114,867,000. Then the total cost price in the year. This is how we came about the total profits. The total profit for the year, we subtracted the total costs from the revenue. Yeah, so top 5 months with the most revenue is March, December, May, November, and April. And the top 5 months with the highest purchase price, we have the March, February, April, January, and May. Then total profits of the year, okay. Top 5 months with the most profits is November, December, October, July, and August. So okay, I'm coming.
Sorry to cut you, Helen. What
Okay.
what are the 5 months that made the most revenue in the year?
What do you say?
What are the top 5 months that made the most revenue in the year?
Okay. March, which is the first, then followed by December, May, November, and April.
Okay. All right, you can go ahead.
Okay. Okay, the business is profitable overall because since the revenue is greater than the cost and the profit values are profits for every month, the business is consistently making gains rather than losses. And the sales strategies to improve revenue and profits in the coming year is to track which months or product perform best, predict demand trends to avoid stock out or overstock, push product that gives the best profits percentage, the stock management recommendations. So these are the items with remaining stock. The items that sold out fast, that have zero items. So these are the items: microwave oven, toaster, ceiling fan, and others. So I think there are 40. Yes, 40. So items with the highest remaining stock, like over 50 units, are the refrigerator, washing machine, and others. So what are we to do? We have to reduce the ordering of these items that are over 50. Use discount bundles or promotion to like move them, or consider lowering safety stock for next year. So that's all we're able to come up with. Then this is the line chart for the monthly revenue. As you can see, it went up, then came down. At the end of the year, it later went up again. Then for the monthly costs, the price went up, then it came down, and I think the line chart for the monthly costs is kind of descending, like it's decreasing. That is the amount of items purchased from January to December went down. Like maybe let's say in January, the items purchased was like higher than that of December. Then the total monthly profits, like the amount was increasing from January to December. The profits increases from January to December. So that's why we could say that, okay, the business is profitable. And the amount of units, so this is the line chart for that. So I think that's all. That's all. Okay, this is the sheet for the sales tracker from January to December. Yes, I'm done. Hello?
Oh,
Can anybody
sorry.
hear me?
Yeah, I
Okay.
didn't know my mic was on mute. So can you select December for me, please?
You say?
Can you select December for me? From your sales tracker, select December for me.
Selected already.
Okay, okay, okay. All right. Go to your restock analysis, please. Can you hear me?
Yes, I'm there.
Okay, okay. Let me see. Okay. Items of this. Okay. Okay. Item zero balance. Okay. So when you say items zero balance carried forward, in this case, the refrigerator is having 147 items left, right?
Yes, so I'll have to I didn't do that. I have to like select the one with the items with zero. So these are the items with zero balance.
Okay. Okay, can you highlight Control Shift down arrow, please?
The
From the
items.
first one, microwave oven. No, microwave oven, yes, from there.
Okay.
No. Like from the first microwave oven is the first zero, right? Okay, so let
Yes.
me see. That's how many? 40, right?
No, zero. I don't understand.
Control Shift down arrow for me, please.
Okay. I've done
Okay, so
that.
the count is 40. Okay,
Yes,
so please
40.
go back to your. There's a place where you said something like predict. Yeah, please go back there.
Okay. Please, where do you say I should go to?
There's a place you said predict. I think it's in your financial KPI or something. Where do you write your report?
This?
No, this is your executive
Okay.
summary. I think it's your financial KPI.
This?
No, 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 no. Yes, yes, this. Okay. Can you scroll up a bit? Just a little bit. Yeah, just yes. Okay, perfect. Leave it like that. Under your sales strategies to improve revenue and profit in the coming year, you said predict demand trends to avoid stockouts or overstock. So please, can you tell me how can a company predict demand trends? What are the possible things that they can do?
Is like highlighting the items that have zero items. So if we should know those items that have zero are left with zero items, then the company purchase more of those items. Why those that are overstock should they should not like buy more of those that are overstock.
Okay. 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 So what you just said now, yeah, it actually makes sense. But then when you put it in your reports, predict demand trend. Remember, you are writing to the management, right? That's the one thing I noticed. Please, everyone, pay attention. That's the one thing I noticed. You're writing a report to the management. So the way you present it is actually very important. Why? Management does not want to be racking their head on understanding what you mean. All right. They want to be seeing it there on your report. State it. That's why I said make it concise, make it in a way that is understandable by the management and meets management's goals. So when you state something like predict demand trends, in their head to be like, this is extra work, right? You should have done that already. So what you should have just said is what? Based off the analysis, any item you can, I'm sure you must have observed a few items that are either not selling or they they're either not selling. Let's use that for example, right? You can say, okay, let me mention one product item. For example, let's say LED lights or any storage. Just an example, please. I'm not saying that's what it is. You can say for items that, sorry, let me redraft that again. You can say something like, for items that had a continuous decline in sales, all right, the management is advised to either what? Carry out a further research to know what happened on this product items. All right. You don't just rule out an item just like that because, okay, at some point you notice that their sales decline. No, you do a further research to know what happened. All right. And then secondly, from your research, if you find out that, okay, the company was not just aiming at the right target, you go to marketing. Marketing is then advised to what? Draft out strategies that will be aimed at the main consumers of these items. Any storage, I think it's mostly companies that use that. All right. LED lights, companies, households, whichever, all right, can use that as well. So they should draft out strategies that will meet this audience efficiently. All right. So when you say predict demand trends, it's not enough. All right. You have to recommend something that they can do. All right. Like I just said, further research, stronger marketing strategies. Some people say, okay, maybe let's offer discounts, all right, or some people say let's drop down the price of the items so that more people can buy, all right. Some people can say offer after sales service, all right, for those items that need installation, all right. So those are the things that you can actually recommend. All right. So once management sees it in your report, to be like, oh, let's meet with marketing team, let's meet with the research team so that they can get this thing over with. All right. So you're just saying predict demand trends. No, they want to know how can we predict demand trends? What can we do? All right.
Okay.
All right. So please, everyone, take notes. All right. When you are making a recommendation, you have to state possible ways that they can get it done. All right. Especially in situations where you know that the recommendation that you're giving is something that you yourself you can figure out. All right.
Okay.
All right. So that's fine. You said push product to give you the best profits percentage. Okay. Push products that give you the best profits percentage. Yet again, state. Example, NAS, lead line, whatever. These items made a lot of profits within the year, blah, 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 like that, like that. All right?
Okay.
Thank you. So that's then your items with remaining stock. The thing is, this is good, yeah, but then no one wants to start scrolling through and then reading, oh, microwave oven, toaster, ceiling fan. No. Before they get to the last of it, they've forgotten all the items already. They've forgotten, oh, microwave oven is there, or induction cooker is there, like that, like that. All right.
Okay.
All right. So scroll down a bit for me. Okay. Okay. All right. So now the instances where I'll say you making this list is important is when, okay, you have to forward this to the inventory team or the purchase team, the ones that place purchase orders for these items. This is where this list is actually very much important, yeah? Because once you give it to them, they know that, oh, okay, these are the items that need restock or the ones that don't need restock. So they work on just those items, place order for them, and that's it. All right.
Okay.
All right. So in other cases, yeah, if it's a management report and you want to list, the instances where I'll say you can list is where the items are very few. Let's say just about 5 items that need restock. Okay, you can state that there. All right, because it's very few and people can easily grab it at once. All right.
Okay.
All right. All right. So thank you so much, Helen. Thank you. That was an amazing presentation. Thank you. All right. So let me see which team is yet to present. Okay. Group 4, have you presented? No. Group 4.
Hello, Miss Ella. We're
Oh,
requesting
hello.
for just a few more minutes.
Okay. 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 All right. Please, let's know that max by 4:50. All right. We're meant to be done with every form of presentation, and then I just give like a final remark and all that, and that'll be it. All right. So group 4, you have 5 minutes. Let me go back. Group 9, are you guys ready now? Group 9, are you ready? Okay, they are not. Group 13, are you ready?
Just few minutes. Just few minutes. I'm trying to connect my laptop.
Okay. 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 Zainab, are you with us? Miss
Yes,
Zainab,
very
I'm
well.
not sure with
Yes, I
us.
am.
Okay, so are you ready to present yours?
Yes, please. So please, Miss Isoken will be the one to help me share the screen because I am not able to share my screen here because of the laptop I'm using. So I
Okay, all
have a
right.
bit of challenge with my personal laptop, so that's why I should be presenting for me.
Okay, all right. Thank you so
All right.
much, Mrs. Okay, thank you.
All right. Good afternoon, everyone, once again.
Can you see the screen? Zena?
Yes, I
Yes,
can.
yes,
Yes,
we
I can.
can.
Okay.
Thank you.
Thank you very much. Zainab from Group 11. I was the only one that did this project by myself. The likes of Timileyin. Okay, so Timileyin partially participated. He joined the first call I did. I think that should be the second day when the groups were made. So because I had a brief meeting with them on how we would go about the project, and just two people joined the call. And then the following day, I asked us to submit whatever results we got in, which he did, but it's not actually what the group, it's not actually what we expected to do. And since then, nobody actually reached out or said anything on the group. So I did all the projects by myself. So moving to the summary of, okay, Emanuela, your hand is up.
Yes, thank you, Zainab. Thank you. So, it's okay. I can't see I can see your screen. Like no one is sharing currently.
Okay, let me reshare.
Okay, thank you. Zainab,
Okay, so
please.
okay, let me just continue while she presents. So
Okay.
so the summary of the overall performance of the year for Pine Households and Office Supplies Limited. The company recorded a total revenue of 114 million, which is a 4% increase from the previous year of 110 million. A total cost of 92 million, which is a 1% increase from the previous year of 91 million, resulting in a profit of 22 million, which is a 20% increase from the previous year of 19 million. And they sold 19,445 units of items in Q4, which is a 23% increase from the previous year of 12,800 units. So out of 142 items, 7 items got over 1,000 units sold, while the rest got units sold within the ranges of 900 to 100 units. So the month of March had the highest revenue, then dropped continuously till September, and then the revenue started growing up between October and December. So the units sold reduced month on month due to the low supply of high demanding items, resulting to a low percentage increase of the revenue from the previous year. So I would share my dashboard as I go forward. Please, can you hear me move to sales tracker? No, sales tracker.
Okay, sales tracker.
Yes, please.
Okay.
No, should be backward. Yes, thank you. So for my sales tracker, I have the months to, okay, so please can you hear me scroll side so I can talk on the average cost price per unit and the likes? To the left, scroll to the left. Yes, thank you. Yeah, so average cost price per unit is 54,029. Average sales price per unit is 67,411. We have the average unit sold in the year to be 50. Total units sold in the year is 85,710. While total units sold in Q4 is total revenue is 114.8 million. Total profit is 22.8 million, and total cost is 92.06 million. So for the month toggling, if we go to the month, so I did kind of a filtering something. So if you toggle on the months column, you would be able to select any month that you want to see the details of the performance.
Okay, it's okay. Can you select November for me, please?
So please, you have to on okay, yes, thank you.
Okay. Okay. All right, Zainab, we can go ahead.
All right, thank you, ma'am. So please, can you let me move to restock alert analysis? Okay, thank you. So for our restock alert analysis, we have number of items with zero balance carried forward, which is to be 40. We have a number of items with less than or equal to 50 balance CF, but not zero, which is 60 items. We have the percentage of items that require restock, any item that is less than or equal to 50, which is 70% of all the stocks. We have number of items with greater than 50 balance CF, which is 42. And so the total number of items that require restock, any item less than. So I just did this on my own to just get the percentage of items that require restock to give me 70%. So which means the remaining items, the remaining 30% are items with greater than 50 units. So which is a percentage of items with zero balance CF is 28%. So for our inventory, so if you see the inventory table, I did the checkbox to be in the sense that when you check, that means it is in stock, but when you uncheck, it is out of stock, which means those that are in stock still has leftover stocks, while those that are out of stock has zero leftover stocks. And then if you scroll to the left, you would see out of stock, the list of out of stock items, which are 40 items, the list of in-stock items but less than or equal to 50, and the in-stock items but greater than 50. So I just sectioned them like that. So I'm moving to our KPIs. Is any okay? These KPI sheets. Thank you very much. So for our top 5 months with highest revenue, we have March leading, April, May, November, and December. While we have our top 5 months with the highest purchasing cost to be December, November, October, September, and August. And okay, so for our top 5 months with highest profits, we have November, December, October, July, and August. So there is an insight I got from here, which is the likes of March. March is not occurring. March is not in the highest profits column, while it is under the highest revenue, which is even the highest revenue month. So I deduce that this could be because there are much more cheap products that are sold with low profits margin, like cheap products with low profits margin were sold in March to bring the highest revenue, but not contributing to the profits not contributing much to the profit of the company. And the likes of November, which is the month with the highest profits, but did not generate the highest revenue for us, because if you check, March is leading to be the highest month with the highest revenue, while November is like the 4th month. So this could be because of low products that were sold with high profit margin. Low products that were sold with high profit margin. Then for our top 5, so for our top performing items in profits, we have the smart lights bulb, electric skillet, clock, sticky notes, and document holder. Then we have our underperforming items in profits. We have the smartwatch charger, water purifier, cordless phone, smart thermostats, and shaver. The top performing items in terms of units sold, we have the table fan, wireless charger, juicer, NES storage, and air fryer. And for the underperforming items in units sold, we have pen holder, sewing machine, popcorn maker, electric screwdriver, and bread maker. So for the items that picked up later in the year, the likes of marker sets, office chair, projector mounts, smart board, smart switch, smart TV, and stand mixer. So these items are picked up later in the year. In in terms of sales, yeah, in terms of their revenue, not probably maybe in their unit. So this is speaking to the revenue. So so this was where I did my calculation year on year to get the percentage at which the company performed. So please help me move to, yes, please.
Zainab, sorry to cut you. Please, what are your top 5 underperforming items in terms of units sold?
Top 5 underperforming items.
Yes, please.
In terms of what, ma?
Units sold.
Okay, we have table farm, wireless charger, juicer, NAS storage, and air fryer.
No, underperforming items in terms of units sold.
Oh.
Yes.
Okay, I think these are just the last 5. These are the last 5 years that I have.
Okay, so can you state them for me again?
Okay. So we have pen holder, sewing machine, popcorn maker, electric screwdriver, and bread maker.
All right. What are the items that had a continuous decline in sales during the year?
Continuous decline in sales.
Yeah. Any items at all?
Okay. The likes of Okay, so I don't think there are items with continuous decline in sales, because aside the items that picked up later in the year, there are some items that were fluctuating, but not that there was a continuous decline in sales for them. I could not get any item that had continuous decline in sales over the year.
Okay. Did any item pick up during the year?
Yes. So I listed them already. The likes of marker sets, office chair, projector mount, smart board, smart switch, smart TV, stand mixer, which I can show you on the dashboard.
Yes, please. Thank you.
All right. So please, can you move to the dashboard sheets? Okay. So here I have my slicer, which I can use to toggle any item that I want. So I'll first go with the marker sets, which is so can please could you hear me pick the marker set from the slicer?
Can you see it? I've done that.
Not to be serious now.
No, not yes, I can. So if you look at the total revenue here, you can see that from January and February, it was like a stable price. Then it moved up, then started declining again up till, let's say, September. Then from October, it started moving forward, which means it's picked up sales along the line. So let me try office chair as well.
Zainab, I've done that. Can you see it?
Yes, I can. Thank you. Yeah, so if you look at the total revenue as well, the revenue, office chair picked up sales back around August. So For let me do one more item, which is on projector mounts. Please, projector mounts. So if you look at the total, revenue, we can see that it moved from January till March. It was kind of okay. So from January, started with a low margin. Then I think it skyrocketed around April, then moved down again till July. I think from August, then started moving, even though it was not really steady. But I think those were some of the items that picked up later in the year. Thank you, Isoken. Please, can you hear me move to insights and recommendations? So number one insight, the question was the business profitable, yes or no? So in my own opinion, I would say yes. The business was profitable in the sense that it's recorded a total purchasing cost of, sorry, it's recorded a total revenue of 114 million as against the previous year, which was 110 million naira, which was a 4% increase. Even though it is not really a 4% is not really much, but still it is still something. Then as regards the profits, it's recorded a profit of 22 million as against 19 million naira of the previous year, which was about 20%. I think that should be 20% increase. Yes, 20% increase from the previous year. Then the company's average monthly sales range between 66,000 and 68,000 naira, which is very less compared to the industry widely. So I think the question says, so the question was, what is the company's performance when compared to the industry? What is the company's performance when compared to the industry? So that's why I just took on the average monthly sales. It ranges between 66,000 naira and 68,000, which is way less compared to the industry right now. And I think from the industry, the average monthly sales for mid-sized distributors in the industry range between 8 million naira and 12 million naira. So for sales strategies to improve revenue and profit in the coming year, recruitment of a competent and well-informed inventory manager to keep track of the stocks on time. Then partnership or contract deals with authentic affiliate marketers or influencers, because we all know that ads that most influencers make actually boost any brand's visibility as well as their sales. So if the company can partner with the likes of influencers, which would help the company in gaining more customers through reviews. Then we have regular tracking of stocks to stay informed as which products to restock more and when to restock them. And the likes of high demanding items, the likes of smartwatch charger, the likes of what's it again? Baby monitor. I think that was the first item that was generating revenue. Yes, baby monitor generated 1.6 million revenue for us. Then promotion of high margin items to help boost the revenue as well. Then for question number 4, stock management recommendations, whether to reduce overstock, restock fast selling items. So fast selling items should be restocked regularly, while other items with low sales should be reduced. The focus should be more on the fast selling items. Discounts can also come in this aspect, might also be on the low selling items. There might be discounts, probably maybe like promo, a particular period of time where there will be promo. So while I was working on this particular project, I pictured Jumia to be the e-commerce I'm working with, since it's like an e-commerce something as well. So for the 5th question, identify growth opportunities for the business. So the growth opportunities for the company include expansion of market space or customer base. So as they utilize the strategies being placed in front, the market space and as well as the customer base would be expanded. The brand visibility through improved marketing strategy as well as partnership with local distributors. I think this would be the end of my presentation. Thank you.
All right. Thank you so much, Zainab. Thank you. That was really, really good. That was really, really good. Thank you. All right. So let me just ask you a few questions here. So, which item made the most revenue in the year?
I didn't get you, ma.
Which item made the most revenue in the year?
Baby months.
Do you say baby what?
Sorry, baby monitor rather.
Okay, 1 minute. Baby monitor, right? Okay. Okay. So what was the total revenue?
1.650. 1.6 million. Let me just put that way. 1.6 million.
1.6. Okay. All right. All right. Do you have a sheet where you computed total revenue?
Yes, on the pivot sheets.
Okay. Can you open that for me?
No, it should be on the KPI sheet. There is the top 5 items with highest revenue. The KPI sheets.
Okay. Let me see that, please. Okay, baby monitor. Okay, it's okay. Can you click on the filter in the item there?
You asked for?
No. Top 5 items with highest
But
revenue.
he said I don't like it. Not like
Top 5 items.
He does not like it.
Can you see the screen?
Yes, I can see the screen. That filter there under top 5 items with highest revenue. Can you click on that for me?
Okay.
Have you done that? No, that is month. Items. You can see that on column
Okay.
NR. Yeah.
With highest revenue, right?
Yes. Okay, can you type paper shredder for me?
Should I unfilter the baby monitor?
Just in the search item, type paper shredder for me.
Paper shredder, no, please.
Okay, then click on OK for me. Okay. Zainab.
Yes, ma.
You can already see that, right?
Yes.
Okay. All right.
Thank you.
All right. It's okay. Go back to that filter, please. Go back to that filter where you typed paper shredder here. All right, go to value filters. Click on value filters. Value filters. Yeah. Then go to top 10. Go all the way down. You see top 10 there. All right. No. Change that 10 to 5. No, it won't work. Yeah, change that 10 to 5. All right, then hit OK. All right. So Zainab, can you hear me?
Yes, ma'am.
All right. So next time, yeah, because what you said was baby mount, right? Sorry, baby
Yes.
monitor.
Big monitor, yes.
Yes. All right. So next time, yeah, if you want to get things like this done easily, what you do is you select the top 10. From the top 10 or even the top 5, you can, or even the top 1, you can automatically see the item that made the highest revenue or highest cost, whatever. All right.
Yes, ma'am.
Yeah.
Thank you very much.
So yeah, you're welcome. So, but Zainab, this was really, really good. Right? In as much as there is no proper reports, yeah, but this is good.
Thank
This
you,
is
ma'am.
good. I love your
So,
dashboard, by the way. Your
thank you, ma'am.
dashboard is
So
amazing.
the reason why I could not present with the slides was because my personal laptop actually had issue. I already did the PowerPoint slides on it, but on Friday it had issue. So I had to quickly do this on this my laptop I'm using currently yesterday on the Excel. So I wasn't able to work on the PowerPoint anymore.
Okay. Okay. All right. That's fine. Thank you so much.
Thank you very much, ma'am. Thank you, it's okay.
Yeah. All right. It's okay. Thank you so much. God bless you. Thank you.
You're welcome.
All right. Zainab, what group are you? What
Group
group is that?
11. 11.
Group 11. Okay. All right. Next team, please.
Hi, Miss Ella.
Hello. Can you hear
Trying
me?
to share my
Please, you want me
yeah,
to stop this class by 5, right?
yes,
So is your team ready now? Is
yes,
your
we're
team ready? I'll
ready.
be taking only 2 teams and that will be all. So what team is presenting now?
Team 3, group 3.
Okay, group 3.
Group 13 is also ready, ma'am.
Okay, group 3, group 13. Which other group is ready? Which other group? Faith, is your group ready? Faith Alimo, is your group ready?
Group 4 is
Okay.
ready.
Group what?
Group
What
4.
group is that? Group 4. So we have group 3, group 13, right?
Yes, ma. Group 3 and group 13 currently.
Group 3, group 13, and group 4. So you guys have 9 minutes each. So please, 9
Yes.
minutes, 9 minutes. Is that okay?
All right, that's okay, ma'am.
All right. Which group is this
Okay,
now?
ma'am. Yeah, it's
Group
okay.
3 now. This is group 3, ma'am.
Okay, this is group 3. Who is presenting, please?
Okay,
I think this
Alabi
is group
Ayomide
3.
is presenting.
Alabi, what? Okay,
Alabi
Alabi
Ayomide.
Ayomide. Okay, all right, please go ahead.
So I'll just be going straight to the team members. So
Okay.
for the team members, right. Can you hear me, ma'am?
Yes, I can hear you.
All right. So the team members that worked on the presentation, at least we were 5 on the group, but most people were not really available. So it was Miss Newwood, that's Miss Success, and her that was able to work together to on the projects. So I think I would just like to note one other member that was on the group. I think that's she mentioned that she's on a school field trip, so that's why she couldn't join. So
Okay.
I'm going to straight to all right. So straight to the overall performance. So Pine Household and Office Supplies Limited recorded 85,710 units sold across the 142 products items in 12 months. So the amounts we did for each month for every goods that was sold. And we were able to come up with 85,710 units of goods sold. Then the company generated a total revenue of 114 million naira. That's 114,867,556 million naira in naira, with a total profits of 22.8 million naira. Then also we also calculated the average costs per unit, and the average cost per unit that we got was 1,074 naira. Why the average sales price per unit was 1,340 naira. So, and from there we'll be able to derive the profit margin, which was 20%. As the profit margin, when compared to the revenue, when we compare their profits, it was 20% we were able to get, man. So the best performing months, based on what we checked, the best performing months was March, with the highest sales and revenue recorded. So though we also noted some other months, the top 5 months that performed. The top one, okay, the best performing month itself was March. So, however, sales showed a decline in all the months preceding January due to increase in selling price. So we noticed, when we draw the charts that was representing the performance from January, it started dropping. By the time it got to February, little by little, it was dropping. It kept dropping till December. So the reason for that is, I think it's due to the sales price. The sales price also, we noticed that it was for the goods. It was it was increasing, mostly increasing. So right. So then our the key insights. The months of July, August, October, November, and December were the top 5 months with the highest profits. So we noted the top 5 months with the highest profit, and these were July, August, October, November, and December. Then when we calculated the profits in total of the top 5 products, they actually they generated 3% of the total revenue, 3% of the total revenue, showing a concentration of sales in few items. So also we were able to, under the insights, we also noted some goods which were underperforming. The companies, I think they were the lowest profit. They kept making losses. In fact, that's Shiva, smart thermostats, cordless phone, water purifier, and smartwatch charger. So they consistently underperformed. And okay, we noted it. We noted it that they are, if possible, the company can either discontinue or not focus on those particular goods. So, or they can also they adjust the price. Then the inventory checks also. When we performed the inventory checks, we discovered that there were no items with low balance stock based on what we were given. We checked for the ones that are less than 50, it was actually 0. So there was no inventory with low balance stock. So in fact, if I'm to say based on our analysis, mostly it was overstocking. They had excess goods for most of their product at the end of the year. So then, okay, the conclusion and recommendation. Okay, so the conclusion and recommendation, the company remained profitable throughout the year based on what we could get. Overall, they kept making profits throughout the year. So in fact, when we checked it at the end of the revenue when compared with the cost that was involved in production, they kept making profits. It's reduced at the point it was increasing. I would like to. Okay, I think we see the graph is shown in the Excel. So at the point it's increased, then it's dropped a bit towards at the middle, then it's towards the end of the year it kept increasing again. So they made profits overall. So then we just noted for the recommendation that, so if possible, strengthen inventory management. So the inventory management, they should manage their inventory more rather than having cases where we have maintain higher stock for best-selling products. So products that they actually trade more, they can keep maintaining higher stock for those ones. But for the ones the ones that are underperforming, rather than having excess of goods that are underperforming, they can be assigned their, how will I put it now? Their inventory management. They can restructure. So then also boost sales with targeted promotions, focus market campaign on high demand products and seasonal trends. So for some goods, we discovered that maybe due to probably by the time it's getting to the middle of the year, it's dropped. For some, it's increased. So they can work with targeting those seasons. So then also improve data-driven decision making. Use dashboard and trackers to monitor sales, profit margins, and product performance in real time. Then enhance customer retention. Introduce loyalty programs and personalized offers to drive repeat purchases. So for the ones that have been for the sales that they've been making before, they should introduce loyalty programs where they will be able to retain those set of customers that have been with them before. All right, that's for the PowerPoint. That's all.
All right. All right. All right. Thank you so much. Please quickly go to your Excel workbook, please.
All right, ma'am.
All right.
Can you see my screen?
Okay, yes, the screen is showing currently.
Okay.
Okay. Okay, so quickly go to your sales tracker.
I'm there, ma.
Okay. 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 All right. Go to your restock analysis. Okay. All right. That's fine. All right. Thank you so much. Thank you. Mr. Ayomide, thank you so much.
Yes, ma'am.
So,
All right, ma'am. Thanks
all
for
right. I love your PowerPoint presentation. Yeah, it's very neat. Thank you.
Thank you, ma.
Yes, ma'am. You're welcome.
Thank you. So that's for group 3. Which other group mentioned? Group 4, are you ready for me? Okay,
No,
yes,
no,
group 13.
ma'am.
Group 13, are you ready?
Yeah, I'm ready.
Group
We are
13.
ready. Yeah,
Okay, all right,
never mind.
please. Remember, 9 minutes. 9 minutes. All right.
Okay.
All right.
I'm sharing my screen.
Okay, all right.
Okay. I I see my screen.
Yes, I can.
Oh, okay. All right. So my group we have 1, 2, 3, 4, 5. So we have 5 members in the group. One person is not really active. That's Mr. Iraq. Mr. Emmanuel. He wasn't. All right. So this is my table. Let's quickly dashboard. I have where that this is the first one, and then the second dashboard. From my that year, so the company made total revenue of about 115 million naira, and then the total units of about 85,000, and then total cost around 92 million naira, and then the total profit around 23 naira. The average cost price of 1,079 naira, and then average sales price of around 1,400 naira, and then the average unit sold is this. So from the question asked, so we have the to look for the top 5 months with the most revenue, and we could see March leading the the table. So in March, the total revenue of about 9.7 million, that's around 10 million, and then followed by March, and followed by May, November, and April. And then top 5 months with highest purchases. So we have the same thing. March is also leading. So I think that really follows. So since March is the month where the company made the most profit, so March is also the same month where I think it just tally. Then February, uh, April, January, and then um, this is I want to check this particular month. Uh, okay, sorry, ma. And this is May. Yeah, May. And the next one is the top 5 months with most profits. November here, and that's something to really take note of. March is the month where we have most revenue, most purchases, but November, which is the fourth month where we have most revenue. So we have November being the first month here where we make most profit, followed by December, October, July. And then so my table here, I have the top 5 underperforming items by unit sold. So the first one is the pen holder, sewing machine, popcorn maker, electric screwdriver, bread maker. Then the top 5 months, the top 5 best performing items by unit sold: table fan, wireless charger, juicer, NAS storage, air fryer, and then the top 5 best performing items by profit. We have a smart light bulb, electric skillet, clock, sticky notes, and document. And we just have a little difference here for the second dashboard. The only addition we have here is the items that picked up later in the year as asked in the question. So the smartwatch. So we could see in January, February, there was a decline, then picked up again in March, and then decline. Then later on, from July, it started picking up again till December. And then item with continuous decline in sales throughout the year, that is bread maker. So we could see in January, then February started declining throughout the the year. All right. So this is just a summary of everything I have there. The business profitable? And then the answer is yes. I think I've already made mention of this, the profit, and then and so on and so forth. I think the little thing I just have is that from everything that we have, that the revenue is around 150 million, and then the cost is around 92 million, and then um, the profit is around 23 million. So this means that the business actually keeps around 20 kobo from every 1 naira items, every 1 naira sold. So which is actually very good, you know. And the second question is the how is the company doing compared with the other industry? So the company sells many products of about over 140 items, so mixing everyday fast seller like fans, blender, and so on and so forth. So this is a good for both cash flow and profit. And so the profit margin is around 20% compared to the compared to last year, and that actually shows that the company manage their cost very well, and the prices product effectively. And sales are stronger in the following months, which I've already shown in my dashboard: March, May, November, December. So this is actually around the festive periods and holidays. So which means the company can actually focus on that, when they are trying to do better than the current level of achievement. A few products like table fans, like I showed there. So these ones here bring in a large, a large sales. So if demand for this dropped, so the company may actually struggle. So that means the company needs to really focus on these particular items. So because they are the one bringing in sales. So how can sales and profit be improved? One, so plan around peak seasons, run targeted promotions during Easter, summer, back to school, and then Christmas to boost revenue. Because from our analysis has already shown the months where the company is actually making most of their sales and their profit. And we could see that this season actually falls around the festive period. So the company should pay attention to that. So they should run a targeted promotions during this particular period to boost their revenue alongside their profits. So the company also need to go digital to increase the online sales through Jumia, Konga, and social media campaigns. So the industry trend shows customers are moving online recently, and I believe that every one of us could actually testify to that. So if the company can actually go digital, on platforms such as Jumia, Konga, maybe Amazon, and so on and so forth, and then even run some social media campaigns, their profit and then their revenue is actually going to increase tremendously. The bundle products offer. So this is also another strategy. So offer packages, for example, a microwave with a coffee machine. That's a bundle package product. So to encourage bigger purchases. So instead of just selling just a microwave, you can sell a microwaves with coffee machine or other items that really match together. So you can pack them together and then sell them as one. So review prices. So for top selling products, a small price increment around like 3 to 5% could actually raise the profit without affecting the demand. Since these are, just like the higher the demand, the higher the price. So since there's already a demand for this product, so if there's a 3% to 5% increase in the current price, so this could actually bring profit to the company without affecting the demand. So cut slow mover. So some products sell very little, like we have seen bread maker. I would like to go back to, so the company should reduce stop stocking them to focus on the best items. I think bread maker is just the I don't know what to call it. We also have some other items like that, that are really declining throughout the year. Maybe I'll go back uh, to my report to actually show that. So how should stock be managed better? So one, avoid overstocking. So right now, all items have high balances, almost all the items. So this may actually be too much. So money could be used elsewhere to lock up in stock. Currently now there are some items that are already out of stock, which I'm still going back there. There are even some that are not even up to 40, up to 50 again. So focus on the most important products. So check bestsellers every week, like fans, charger. So while reviewing the slower product less often. So forecast demand. So use past sales to plan how much to order in the future. So this will prevent shortage and excesses. I think just like we have said, like there are some months where we have most revenue, where we have most products. So with what our current analysis has reviewed to us, so the company can actually take advantage of that in order to boost their revenue in the next season. So work with suppliers, so negotiate faster delivery times, so the company can hold less stock but still meet their their demand. This is actually very, very, very important, especially in the world where everybody just wants, you know, whatever they want, they just want it quick as fast as possible. So the company needs to really work on their supplier and then to ensure they have a fast delivery. So this is just the summary of everything I've said. So the company is already profitable and competitive, but it can actually do better. And how could they do that? Just by strengthening online and then seasonal sales, managing stock more wisely, and then focusing on high demand products while cutting the weak ones if possible. So this will help the pin house and office supplier to continue grow and stay ahead in the competitive market. Uh, what else did I want to show here? Okay. If there's any questions, the things I think I have here. So this is my restock tables. The number of items, zero balance is 11. So the number of items with 50 units currently is just 0. So, and then the percentage of items required to stock, I have. Also, this one is the, I'm sorry for that. This is the percentage of items that is greater than, less than or equals to 50, 79, and then greater than 50, 63. So this is my monthly summary. So the units sold in the month of January in all the months are here, and then this is the month over month per unit, and then this is the month over month per profit, and I try to rank them so per unit, per profit, per revenue, then also per profit. So now KPI, I've already gone through that, so I just simplified them in a table here. So this is my pivot table, and this is my sales table for my sales tracker. So that's all. Miss Ella. Miss Ella, I'm done. Hello, can anyone hear me?
I can hear you. I think she has brought everything. I can hear you.
Okay. Is Miss Ella here? Okay.
Yes, Mr. Kunle, I can hear you. I can hear you. All right. First
Okay.
things first.
So
Yeah. First things
okay.
first, I
Yeah.
love the way you
I didn't hear that.
presented your project. Can you hear me?
Yeah, I can
Can
hear
you
you
hear
now.
me? Okay. So I said, first things
Yes,
first, I
I can
love
hear
the
you.
way you presented your project. Yeah. Then I loved like the final word at the end of your report, that final word area.
Yeah, thank you.
Yeah, to sort of like
Okay.
summarize everything that you said. And your dashboard. Okay, this is nice. This is really, really good. Yeah, this is good. This is good. All right. All right. Can I see your sales tracker quickly, please?
Okay. All right. This is it.
Okay, so this is your sales tracker. Okay. 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 All right. All right. That's fine. That's
So
fine.
this is
Thank
the
you so
per
much, Mr.
project.
Kule.
Then there's also one per month. All right.
Okay.
Yes, ma'am.
Okay. All right. Mr. Kule, I I love this. Yeah. I love this. In as much as there are a few
All right.
errors here and there, but I love like the way it is neat. Yeah.
Okay.
All right. So thank you so much, Mr. Kule. Thank you.
Yes, ma'am.
So that is that for group 13, right? So moving on to the last group. What group is that? Group 4, right?
Yes. Group 4.
Okay.
Yes, we are ready.
All right, please, the stage is yours. 9 minutes.
Okay, I would like to share my screen.
Sorry, Mr. Nathaniel, can you mute yourself, please? Mr. Nathaniel, can you mute yourself, please? Please, if you know your mic is on, aside Miss Faith, please mute yourself. Thank you. All right, Faith. All right, Faith, please. The stage is yours.
Hello, can you hear me?
Yes, I can hear you, Faith. Please, you can go ahead.
Can you all see my screen?
Oh, no. I was earlier, but now, no.
Let me
Oh,
share
you're the one
it.
sharing, right? Okay.
Yes.
I think I can see. Yes, please.
Okay. Good evening, members. This is Faith Alimo from Group 4, and we'll be sharing with you our project. On the screen are the members of my group, and we were all able to participate within our different capacities. So this is presenting our review of the Pine Household Office Supplies, which is a fast-growing distributor of the household appliances. It offers about 142 products within both the residential and corporate client space. And this is a brief summary of how it is performing. For the
sorry.
Yes, please.
So sorry to cut you. I'm not seeing like your presentation. I'm just seeing the Microsoft Team window.
Oh. Is my screen seen?
Yes, I can now.
Yes, so this is these are the members of my group. We were 4 and we were all able to participate in the project. And moving on to the key performance indicators, both the financial and non-financial, we're able to establish the average cost per unit at 1,079 nairas, average sales price per unit at 1,351 nairas. The average units sold per item was 50, and the total units sold within the year was 85,710 units. The total revenue within the year was 115,794,210 naira. The total cost in the year was 1,839,311 naira, and the total profit in the year was 463,380 naira. For the top performance highlights, the top 5 months with the most revenue, we have August, we have September, we have January, February, and July. Then the top 5 months with the highest purchase cost, we have December, May, November, and March. Then the top 5 months with the most profit were November, December, October, September, and August, which is a key because these are the months in the later part of the year, which feeds into the insight we shall address later on. Then for the best and versus the underperforming items, the top 5 best performing items in terms of the units sold, we have the table fan, the wireless charger, the juicer, the NAS storage, and the air fryer. Then top 5 in terms of profit, we had the LED strip light, the sticky notes, the portable SSD, the printer, and the scanner. For the top 5 underperforming items in terms of the units sold, we had the pen holder, sewing machine, popcorn maker, electric screwdriver, and the bread maker. And for the top 5 underperforming items in terms of profit, we have the water purifier, the smart thermostat, the cordless phone, the smart watch charger, and the shaver. The figures you see are the figures that were in terms of the profit. For the sales trends, we concluded on a general summary that the company review and profit peaked at Q4. Those are the last 3 months of the year, while the units sold peaked in March, July, and December, which is important for insight because it was distributed within different quarters of the year. So for the continuous, the items that demonstrated a continuous decline in sales, we had the washing machine, the humidifier, the cash register, the access control system. And then for the items that later picked up in the year, we had the refrigerator, the microwave, the vacuum cleaner, the scanner, among many others. For the MOM growth in terms of units sold and profit, the month with the most, for the MOM growth, the month with the most MOM rate in terms of units sold was March, and the figure you see is the MOM rate for March. And the month with the most MOM rate in terms of profit was May, and that is the figure that you see. These are our monthly trends in terms of revenue, costs, and profit, and then for the units sold. Then for the restock analysis, we have items with zero balance were 50, items we at less than or equal to 50 but not zero were 60. Then items greater than 50 balance were 42, and 100% of the items required some level of restock. For the strategic insights that we were able to observe, all in all, the company is profitable but has not maximized its margins. The sales and revenue align with most of the industry's averages, and there were some missed opportunities due to poor stock planning. For the recommendations, we can recommend it for the sales strategy. We recommend expanding the digital market, expanding, providing loyalty discounts, as well as paying attention to e-commerce. In terms of stock, we would recommend hiring back an inventory manager because at the start we recognize that the company is operating right now without an inventory manager. We would recommend implementing a restock tracker, especially for units that are above 50. And for the product strategy, would recommend retaining best performing items and phasing out some of the underperforming items, or reconsidering the frequency of how they are restocked. For the growth opportunities, we were able to recognize there's room for eco-friendly and smart product lines. The small and medium enterprises as consumers, and bulk orders from schools, as well as installment plans. So in conclusion, we can conclude that overall Pine household and office supplies performed positively and is on a positive growth path. It improved its inventory and strategic sales. Improving its inventory and strategic sales will unlock higher profit, and a strong foundation exists for Pine to become a leading provider in West Africa. Thank you. I can now share our the Excel workbook. Here we have our Excel workbook. Due to the limit on time, we're not able to achieve some of our targets with the project, such as creating a dashboard that makes presentation more insightful and easier to follow. But these are the summaries of our key performance indicators. Here we have our sales tracker, and what you see are the sliders that you can use to follow through with the various units and items. We also have the restock alert analysis sheet that we're using to track our restock analysis, as well as our monthly trends. Any questions are open. I also have some of my team members on the call, and they will be able to respond as well.
All right, thank you so much, Faith. Thank you. First of all, I love you guys PowerPoint. Yeah, I just love like the brown background and everything. It's really good. All right. First of all, who prepared this presentation? Like, who prepared the PowerPoint slide?
I did. I was the one who led the PowerPoint presentation.
Okay, that was nice. So please go to your Excel workbook, please.
Okay.
All right. Let me look at your sales tracker, please.
Sales tracker.
Yeah. Okay. Okay, so go all the way to the top, please.
Okay.
Okay, tracker for units sold. Okay. All right, let me see your restore.
Pardon?
So let's, all right, to everyone. Everyone effort to make, they're here today, to every team that contributed to their team. Thank you guys so much for everything that actually worked as well. Thank you guys so much. So Zainab, thank you. Mr. Alabi Ayomide from Group 3, thank you. Mr. Maritala Adekune, thank you. Faith, thank you so much. Thank you. For so in essence, yeah, you're forwarded into management for review.
Hello, please. Is it my network? I can't hear Miss Ella very well.
Yeah, I've been thinking of that too, if it is my network. So I think it's a network.
All right. Can everyone hear me?
Yes, ma'am.
Okay. All right. So I'm quickly going to share and then we'll just spend 5 minutes on this. All right. Our time is fast spent already. All right. Can everyone see my screen now? Can everyone see my screen?
Yes, ma'am.
Yeah.
Okay.
Yes, ma'am.
Okay. All right. So, like I said last week, Sunday, when I was introducing what the project is all about, yeah, I said you can either present in PDF, PowerPoint, whatever it is, just make it in a way that it is actually presentable. All right. So the first thing I noticed is what? Let me see if I can open the project instruction. Okay, it's not here. Okay. So what does the project instructions say under executive summary? It said, brief and straight to the point, team member's name, and a summary of the overall performance of the year. But then what I noticed was a lot of people just gave their team members names and then went straight up towards key financial performance indicators. All right. The project said, state your team members' names. This was to make it easier for everyone to do. All right. Because ideally, when you're giving an executive summary, all right, what are you doing? You're summarizing your report. Your executive summary summarizes your report. All right. So you cannot just come to executive summary and just say team members' names are this. No. Okay. What else? All right. So please, if you know your team made this error, please take notes. All right. Take notes. All right. So the management report was created on September 30th. Okay. I think I should change this to 28th. September 28, 2025, for the review by the management of the company's overall sales performance for the year. This report analysis and presentation were completed by your team member's name. Come here. All right. So when a management executive is looking at this, they first of all know, oh, okay, this is when the report was created, first of all. And then secondly, the people that worked on it are your team members. All right. All right. Then we move on. An analysis of the sales data provided shows that Fine Household and Office Supplies Limited made a consistent sale revenue of what? 9.3 to 9.6 million naira monthly. When compared to the industry's monthly range of 8.8 to 12 million naira monthly, the company is on the mid to top tier level and still enjoys strong stock turnover. All right. So what have I done in this paragraph here? I've explained the revenue when compared to the industry, because under the strategic insights and recommendations, you were asked to what? Compare with industry average, right? So in your executive summary, what have we done in this paragraph? We've stated the revenue of the company, and we've also compared it to the industry already. So sometimes if the management executive does not want to go deep into your report, from your executive summary, they can see everything already. All right. Sometimes they'll just pick the executive summary and that's what they use in making their decision. All right. They don't need to go deep, go further to know what happened. From the executive summary, they've already seen that. All right. We move further. Cost analysis shows a monthly spend of 7.5 to 7.9. The cost to sales ratio is about what? 81 to 82%. What does cost to sales ratio mean? A company can be making sales, but then their cost is indirectly consuming a major part of their turnover. already. Let's take, for example, a company can be making 1 million. All right. But then when you check your costs, you are spending about 900,000. So by the end of the month, what are you saving? You're saving just 100,000. All right. So in most sense, a company might be making sales, but then you also have to check their costs. All right. When you match up their cost to their sales, is it reasonable? Are we still making profits at the end of the month or at the end of the year? All right. So these are things to also look into. All right. The industry average sits around 75 to 85%. So now, when we computed the company's cost to sales ratio, we're getting what? 81 to 82%. But now, when we check the industry is what? 75 to 85%. So this is still considered a bit normal, in as much as it's already going towards the high side of the industry's average. All right. So we concluded that what the company is not overspending relative to its sales. However, they can still be advised to look for strategies that can bring down their costs. All right. If they can bring down their cost to about 70 to 75%, that's still considered okay. All right. So they're making about 25% profit or even 30. All right. So profitability increased from 17 to 22% of sales revenue within the course of the year. This shows a top tier standing of the company. Why? The industry average was on 10 to 25%. Where was that stated? Yeah. Okay. So when you come right here to industry overview, what do you see? Cost of goods sold purchased typically represents what? 75 to 85% of monthly revenue. Profitability is what? 10 to 25%. Sorry. So now, the company is making what? 17 to 22%, but the industry's average is what? 10 to 25% per month. So 17 to 22% is headed to, it's between the mid to top tier of the industry. All right. So we can see when compared to the industry, the company is actually at a high standing. All right. When compared to pretty much other companies that operate within the industry. All right. Then the company made the most sale in Q1 of the year. From Q2 to Q4, there was a decline in sales. However, growth opportunities were limited by operational challenges, most notably the absence of a dedicated inventory manager. We saw that, all right, in our company and industry overview. This led to missed restocking during high demand months, contributing to 70% of items ending the year with critical stock levels. Despite this, the company's profitability was not disrupted, as it still made significant profit during the year. So from the beginning of our executive summary to this point, what have we seen? First of all, the report was drafted on what date? The management executives have seen that. Who worked on it? The management executive have seen your names. He has also seen what? Revenue so far within the year, costs within the year, profitability within the year, units sold within the year. All right. So with this, the management executive can actually make a decision already. All right. You can already see, oh, this is what happened. All right. Then if it now keeps going further and further, you'll now say, okay, these are the particular areas that made either the most profits or the most sales, and like that. All right. Then what do we say here? The company remains profitable and competitive, but it must strengthen its inventory management, marketing strategies, and e-commerce presence. What do we do here? Our strategies and recommendations. We've literally summarized it here. All right, in this paragraph here, right here, we've literally summarized it. All right. So when you are drafting an executive summary, you are giving, that's why it's called executive summary. Executive summary. It's meant to be what? Professional. I am meant to summarize your report. Why? Because some people do not have the time to be going deep into these things, to going deep into your report. With executive summary, they've pretty much picked up the major things that they need to know. All right, so please take notes. And then we have what our key financial KPIs right here. Financial and product performance KPIs. Then we have a sales tracker. Once you click on this link here, it takes you straight up to the Excel workbook. Then we have our restock sheet. 40 items have zero balance. 60 items have stock balances less than or equal to 50, but not zero. 70% of items need restocking before the start of the coming year. 42 items still have balances over 50. What is our monthly trend? Remember I said create a line chart for what? Revenue, costs, profits, and units sold. All right. So in this case, what have I done? I simply explained the observed pattern in, first of all, revenue, then in the second, costs, then the next we have what? Profits. All right. And then the last here we have what's our units sold. Then the last part of the project instruction was what? Strategic insights and recommendation. First thing was, what is the company profitable? Yes, and why? First of all, after a detailed analysis, Pine is considered what's profitable. The business made a steady profit of 1.6 to 2.1 million naira monthly. It also made approximately 4 million more in profits compared to the previous year. However, targeted marketing strategies, the company already one recommendation. All right. Now, revenue increased by 4 million. Up is about 1 million compared to the previous year's figures. Like that, like that. Now, the globe is progressively advancing quickly in terms of tech breakthroughs. When individuals can easily obtain what they need using their mobile device, nobody wants to travel that far to get it. In essence, it is suggested that the business develops its e-commerce platform with a seamless experience for customers, because it is one thing to have an e-commerce platform and it is another thing for customers to have a seamless experience. What is a seamless experience? They don't have to struggle with the platform's network all the time. All right, it has to be smooth for customers, because if they get frustrated on your platform, then they will stop coming on it. All right, nobody wants to buy from it because the stress or the steps is just too much for them. All right, to stay up to date with changing consumer demands and to comprehend regional variations. All right, consumer and target market research should be conducted periodically, like that, like that, like that, all the way down to the end. Then we have what? Finally, the company is advised to introduce a sales tracker that monitors their monthly sales and keeps track of demand and prevents future stockouts. This sales tracker also helps to minimize the chances of theft, as figures are automated once imputed. I explained this when I was taking us through a sales tracker. All right, so that is that. All right, I'm going to convert this to a PDF and send to the group hopefully today. All right, so guys, that is that about our presentation. All right, so please, everyone, yeah, one thing about being a data analyst is, number one, your analytical skills, and number two, your ability to communicate and present properly. All right, it's not just about analyzing. All right, how will you communicate what you've discovered in your data set to either your client or management or your supervisor or whoever? All right, so it's not just, don't just develop your hard skills, Excel, SQL, and the rest. Develop your soft skills as well. They're very, very important. They're very, very important. All right, sometimes at your interviews, your soft skills that will get you past the door. all right? Because the way you command respect and the way you command attention in the room, your recruiter will be like, oh, I love this person. Like, she commands attention from people, all right? The way you speak, the way you present your project and stuff like that. All right. So guys, please, as you are building your hard skills, build your soft skills as well. All right. And this is going to be my last class with you. Yeah. And I don't know, I think the next class is either going to be Power BI or SQL. Please take this class seriously. SQL is becoming very, very important for every data analyst to learn. Same with Power BI. All right. So guys, I wish you all the best in the remaining parts of the class. I wish you all the absolute, absolute best. All right. So I have to leave now. I need to be somewhere by 6. All right. So please, anything at all, reach out to me on WhatsApp. I'm always available. All right. Thank you guys so much.
Thank you.
Yeah. All right.
Thank you so much, ma'am.
Miss Isoken. Hello.